Hey everyone, so today we're going to continue building off of what we've discussed in previous videos, which is analyzing earnings trades, creating a structure, and how we can better position ourselves to take advantage of what could be inefficiencies in the market. So today's example is going to be on ticker symbol AMAT, that is Applied Materials Incorporated, who reports earnings on Thursday, February 16th after the close. So let's break it down. All right. First, let's go through our analysis, right? Now, before we even conduct any fundamental analysis, I like to get things down to where we are seeing opportunity, right? So here we have a scan, right, for earnings tomorrow after market close, and we're sorting it between implied move versus average move. So we have ticker symbol SPLK, that's DoorDash, PACB, RDFN, DraftKings, and you're going to notice AMAT right there. Now, some people might say, well, SPLK looks really good. Well, liquidity is a bit of an issue there, right? Okay, but what about Dash, right? Dash is good, but the problem with Dash, and the reason that I'm not making a video today about Dash, is because the lack of time with this, right? Could it be good? Yes. Historically, this is good. Selling volatility around names that, haven't been around for a long time. But here's the problem. I like consistency a lot. Just one of the things that I like. And with consistency, you can see this here in real time. Does consistency mean that if you thought a little bit more in depth and you were able to figure something out about, say, DoorDash and you were able to find things that other people did? Well, yes, it's great. But I personally like to keep things a little bit more simple. So that's why I always like looking at my back test right here to make sure that, whatever I'm selling volatility on, I can see that historically this premium has existed on it, right? So that's one of the big things that I like to look for. It's one of the things that I really value. We can see a cumulative P&L here of 290%. That's what we want, right? You want this. Remember, this is what you get paid. This is really how you get paid. This is how you get paid for this particular trade. This is how that would have worked doing this for the last, 20-ish quarters or so. So now that we have that, let's go through the fundamentals. Why is this here? Why are we seeing an implied move that is, 14% higher than the average move? What is going on? Well, guys, mostly probably due to the fact that the sector it's in, I had to guess. One, it's probably just premium. Two is they're expected to have a really strong quarter. Applied Materials expect to have an EPS of 1.93. That is higher than any estimate that it's had in the previous year, right? That's basically in line with Q3 of 2022, right? They are forecasted for some pretty strong numbers, right? Now, this could be, entirely due to just the market's excited. This could be due to fear and uncertainty, though, from the downside, right? Remember, Nvidia, a lot of people said Nvidia was going to have a monster quarter. Nvidia did not have a monster quarter. The stock opened actually down. I think it was down like 2%. Other similar type tech hardware semi names did have good quarters though, like AMD. So it's an entire coin toss. So that's basically what it is. Just noise is what it seems like. Retail wise, not a whole lot of retail. And one of the ways that you can really look at that is just looking up AMAT stock twits, right? This is what sometimes I like to do. You just go to stock twits, right? I mean, this is a company with a pretty big market cap, almost 100 billion in market cap. Only 24,000 watchers or so. Not a whole lot of volume on here. A lot of bots, a lot of algos. So nothing really screaming retail's involved here. So this is probably just premium and noise, right? And that is good as well. However, nothing beats selling to your standard retail traders just buying options, zero DT. However, this is still pretty quality. Now, looking at one last thing. So we have our practice. We see how this looks. We see down here, the edge, so to speak, is relatively small. And then we have this, right? I want to talk about this because I think that this is in large part of another video we're going to make pretty shortly, which is regards to things that happened in the market recently, and that is the CPI. So you're going to notice that On February 13th, implied move was 5.5%. CPI comes out on the 14th, it tanks to 4.4. Today it's down to 4.01. This could be due to the fact that, just broader market volatility, the CPI, the fear, the uncertainty. And the reason I say that it could be that, is because if we go to relative value and we go to the non-event IV10, so this is taking the earnings event completely out of the equation, we can see the same thing. February 13th, right? So like tanks. 13th, was that 30%? Now it's down to 26.5. The day of the CPI. So that could be what it is. That's a logical assumption, right? Now, obviously, we don't like selling this, right? Ideally, we want to be selling here, but remember, guys, we get paid for this. We do not get paid for selling here or selling here. We get paid for selling at either of these spots and the move to be below it, right? That's all we get paid to do. So, structuring the trade. Pretty simple, guys. Pretty simple. It's your standard strat, right? Especially on trades like this where the blowout risk appears to be minimal. Don't overthink it. Um, Volatility forecast put into here. Given the average move, if we get to the downside, expected P&L of around 120 bucks per bet. Risking 494. Your break evens are going to be 113 bucks approximately to the upside, 123 downside. Yeah, and I mean, obviously, guys, if you want to structure out something like a condor, you totally can. AMAT has a very, very liquid chain for smaller accounts in that regard. Good amount of volume, enough for smaller accounts to get filled here. You can see that. Also, another thing is that you can get this down precise, right? So when you're practicing some of the things that you probably have been looking at, right? You're able to tone it down a bit versus, say selling vol on, a stock where the options chain is like 120, 115, 110. You've got every single one in either direction. It's great. So spreads also look pretty good. What I mean by that is the spread between the bid and the ask. It's not completely ridiculous. So all that looks good. So just to recap, right? Consistency. Consistency looks great on AMAT, right? Again, I've said 1,000 times, we get paid for this, we do not get paid for this. The drop in the implied move could be the same reason that the drop in non-event implied volatility could be due to the CPI. We got a video coming on that shortly. Lastly, analyze the markets a little bit. It could be with regards to AMAT, most likely not driven by retail. We looked at that. It's most likely due to the noise. Just the excitement, downside risk, just standard noise, which can be good as well. So that is all I got for this one, guys. If you guys have any questions, feel free to comment or message me. Also, if you guys want to check any of the names that you have, feel free to comment below. And I will see you guys in the next one. Peace.